Welcome. So what's going to happen today is we're going to go through an introduction to financial reports. It usually does not take that long. I think I'll talk for about 15 or maybe 20 minutes, and then we'll open it up for some Q&A time. So those Qs go in that field, and then I will answer everything from there. So introduction to financial reports. This topic, like I said, is not going to take too long, but before we actually launch into the reports, we're going to take a look at about 2.5 reports today. Before we get there, we need to do a little bit of backstory and do a little bit of context here. So reports, at the end of the day, they are answers to questions about the financial health and behavior and history and status of your organization. So essentially, what you're wanting to dive into is you want to provide a piece of paper that answers questions that people have. Those might be your board, might be a granting agency, it might just be yourself or your staff. But somebody's asking a question and the report should be the answer to that question. Now, reports are not magical. I can't just go in here with no data and say, show me a balance sheet and it show me something. This is going to be blank. So reports are only as good as the data that you put into the system, because that is inevitably what it is. It's just a query of, hey, bring me back this data within this time frame that applies to these things. That's what a report is. So before you jump into a report, you need to have transactions, and transactions can be entered through a number of screens here, and basically are the ins and outs and the happenings of financial history in your organization that are recorded into an accounting software like Aplos. But before you can enter transactions, you need to have your chart of accounts. So we're going to take kind of a brief detour over here to the account list page here. Now we have a whole webinar that goes over how to structure a chart of accounts, so I won't bore you too much on that today, but it is important to kind of just contextualize before we get to a report, what is the report actually showing, okay? So your chart of accounts overall in accounting, you have 5 different types of accounts. You have assets, which represent possessions or items or balances that your organization owns. So this is stuff like your bank accounts, your accounts receivable. This could actually be physical items as well, like fixed assets, but essentially everything that you own is listed as an asset here. Any money that you owe is listed as a liability. It's the second type. So this can be short or long term. So it can be things like mortgages or vehicle loans, or it can be short term things like a credit card or accounts payable or some sort of payable type item. But either way, any money that you owe out but haven't paid yet is created as a liability. So you have the money that you own here and the money that you owe here as a liability. And then you have your equity. Now equity, we covered this in that other chart of accounts webinar, but equity is essentially representative of each fund that you have. So this is like saying we have this much and we owe this much, and it's within these funds. So we want to make sure that our checking account is represented. So we want to make sure that we have the right balance in our checking account. But in our checking account, we have these other funds. We've got these grant and general funds, or a donor designated fund, or an outreach fund, however you want to kind of slice the pie there. You're essentially saying, this is how I want my organization split up. So your equity then is the kind of worth that each of your funds have. So I say that because these 3 types of accounts here, assets, liabilities, and equity, will populate a report called your balance sheet, which we will take a look at here in a few minutes. But these are very status-based accounts. And then you have income and expense, the other 2 types here. So income and expenses are more activity or behavior based, because these are telling a story. These are saying, if you were to run a balance sheet for the beginning of the year and a balance sheet at the end of the year, that will tell you where you started and where you ended. But it does not tell you what happened in the middle. And that is what your income statement report does, or your budget to actual. Those 2 reports we'll take a look at here today. And those are listing all of your income and expenses. So you would want to create your income and expenses to describe the way that you get money and the way that you spend the money. That is different than your assets and liabilities and equity. These are status-based, so these are very representative of real balances, real liabilities, and real funds that you have. Whereas income and expense is the flavor or the detail or the story that you're telling of how you got from A to B. I use the example also of it's kind of like when you would drop your kids off for school, and at the end, you knew how they were when you dropped them off, right? You had a status at that point. and then you pick them up later and you have a new status. And so then you say, how are you? And it's, good or bad. And then you ask them, how was your day? So what happened in between status 1 and status 2? Tell me about how your day was, because I want to know how you got from one to the other, right? I want to know what happened. I might have an opinion on what happened to you today. So this is their response. It could be anything from fine to, a detailed explanation of whatever occurred during the day. Probably depends on the age of the kid, but you see where I'm going, is this is the story that you're telling to say, here's how we got from one balance sheet to the next. So that is kind of an overview of your chart of accounts. But before you get too hot and heavy into an accounting system, the first thing you'll want to do is create your accounting structure, which is your accounts and your funds and potentially your tags. So again, if you have questions, there's a whole other webinar that goes through that. But once you have that set up, that is the categorical structure which you will use when entering transactions, and that will eventually populate your reports. So now that we have kind of that framework in mind, let's take a look at some reports. Now, there are a lot of reports we could cover here today, and we're really only going to focus on about 2.5 reports. And I say 2.5 because there's the income statement and the balance sheet, and then the budget to actual. The budget to actual is basically your income statement just with your budget factored in. So we will take a look at all of these and then some variations of them here in a second. So the first one here, let's cover the balance sheet. So your balance sheet, again, is a status-based report. This is a one day in time snapshot of what your organization owned, what it owed, and then what it was worth at the end of the day. Let me remove some of this stuff here. It's a little cleaner here. So you'll notice that you'll run it as of one date. So the other report title for a balance sheet is the statement of financial position. And that's exactly what it is it's saying, as of today, here's what we own, here's our total assets, here's what we owe, here's our total liabilities, and then here's our total equity. Now, there's a formula here. So the real formula, the real way to describe this is your assets equal your liabilities plus your equity. So your assets, total assets here, should always equal your total liabilities and equity. Another way to describe that is saying that your assets minus your liabilities is your equity. So if you're ever kind of curious of how this is being calculated, that is essentially what you're looking at. Think of it in terms of like a house. If I had a $200,000 home and I owed $50,000 on it, then my equity is $150,000, right? So same kind of thing with your balance sheet. So as of one day in time, you would run this. It would say, here's all of your assets, here's all of your liabilities, here's all of your equity, and then their balances. Now, any report that you're on can also be customized. There's some sort of date selection, whether it be a range or a certain date in time, depending on the type of report. You can also filter this by certain criteria. So balance sheet specifically can be filtered by funds. And then in your report layout, you could also add things like a subtotal by group or subaccounts. It just depends on the report you're looking at, but this is how you kind of customize the report, how you filter it, and then what date range it's covering. And once you have a date or a report that you like, you can also share it. You can save it for later access. So if you kind of customize this and you want to jump back to it quickly, you can do that. Or you can print it to a PDF or download it into Excel if you'd like to do some further customization. So that is your balance sheet. A variation of the balance sheet is the balance sheet by fund. Now what this will do is, let me do a couple things here, is it's going to list your funds as columns here. So let me add a couple of things in here. I'm going to add all of my funds, and I'm going to add my total column. So if I add all of this in here, what it's doing is it's saying, okay, for each one of my funds, I'm going to have a separate column, and then I want my total over here on the right. So this total column, or this amount column, is the balance sheet that we just looked at. But if you ever look at that and say, well, why does my general fund show 43,000 when my bank is 27? If you have questions like that, well, that is because these balances here on the very right are made up of individual fund balances. So this, we could probably do a whole webinar just on this, but just kind of as a quick rule of thumb, if you're ever wondering why the balance is what it is, I would run this report first, because this will show you, here is this fund's assets, liabilities, and then its equity. So this fund has 45,734.40 of assets. It then owes 2480, so that's why you have a balance of 43,254. Same with this one. This outreach fund has assets and no liabilities, and that's why the equity is such. So on and so forth. You can kind of, see again a snapshot of kind of how each one is being calculated, and that is the balance sheet by fund. This is one of my favorite reports. It's very, very helpful, especially if you have questions on your fund balances. This is where it's at, and that is the balance sheet by fund. Now let's take a look at an income statement. So again, balance sheets are statements of financial position. They are days in time that you look at to say, what is our status as of this date? So typically what you do is for a reporting period, you run a balance sheet at the beginning and the end, and then the story that tells how you got from one to the other is typically your income statement. So this one you'll notice up in the top left has a date range. So I can run it for this month to date, or this year to date, and that will then adjust accordingly, showing you here's all of your income accounts and all of your expense accounts and their totals for that range of time. And much like any other report, I can customize this with a bunch of filters. So I can filter by fund or even by tags if I have tags in play as well. And then I can customize this with some report layout options: share, save, print, or download. This one also is called the Statement of Activities report. Activity being what's happened, right? So activity within a period of time, and that is your income statement. And what you're looking at basically is, here's my total income minus my total expense is my overall net income, or if it's in parentheses there, it's a negative figure, my net loss for the period. So I would expect then to see a change in my balance sheet of about 13,000 once, if I was comparing, January 1st to today. So that is your income statement. Some variations of the income statement could be the comparative income statement by periods, where you can select multiple date ranges and compare them side by side. You can also do the income statement by fund, which is very similar to our balance sheet that we looked at, but just as a income statement instead. So I can say, show me my total, and I can say this year to date. So over on my right-hand side, this is the same income statement that I just looked at, but now each fund has its own column. So I can see how each fund is doing in terms of its income and its expenses. And then also down here at the bottom, it also includes this fund balance summary section, which tells me at the beginning of the period, I had this much in the fund, and then there was this many other fund balance movements. So that could be like transfers or something. So not income and expense, but something else that impacted the fund balance. And then the overall net income and loss leading up to the ending fund balance. And the beginning and ending will correlate with your balance sheet as of the same date range. And then a couple other versions. Here is the income statement by month, showing you again just kind of where you are in your current fiscal year from the beginning to where you are at the moment, each month being its own column here. And then you have a comparative one, which shows you either current month versus the year. So this current month versus my year-to-date amount, or I can do a current month versus last month version as well. And again, all of these can be customized and filtered and saved and shared and downloaded, whatever you need to do. But that is the income statement and variations of it. So that's the first and second report. So now for the half report, the 2.5. That is essentially the budget to actual. And again, I say 2.5 reports because if I were to just run a budget to actual for this year to date, the actual column is what actually happened. So this is my income statement. And if I have a budget in Aplos, then what this does is says, okay, here's your income statement with then your plan or your budget factored in and a difference column to show you, here's what you planned for, here's what actually happened, and here's a difference between the two. So that's why I say it's kind of a 2.5 report, because it's basically your income statement, just with budget data factored in as well. But this report can also be filtered. It can be modified through its layout. You can even add some additional columns in here if you want to expand the report. Like that. And then it can be shared, saved, printed, and downloaded. But that is essentially your budget to actual report. It's your income statement with your plan and compared. There are other versions of the budget report, but those get into, you can do the comparative one, but the budget by fund or the budget by tag are only available if you have advanced budgeting enabled. So just keep that in mind. But that is essentially kind of a high level overview of an introduction to reports. There's kind of 2.5 main reports that you'll probably use for most reporting needs is your balance sheet and income statement, a combination of those two, and or your budget to actual to replace your income statement. But then from there, if you have any other questions or any other needs, there are a myriad of other reports here that could be helpful. And it's just kind of a matter of finding the right one and or working with our support team to kind of figure out, okay, this is what I'm trying to see. So what report would be best to see that? Our support team is very well versed in all of these reports. So feel free to just ask us if you have any questions on that. If you do have any additional questions, feel free to give us a call or use the little kind of messenger here or send us an email. Our support reps are available from 6 a.m. to 6 p.m. Pacific Standard Time, Monday through Friday. So just give us a call or let us know if you have any needs, and we will be happy to help. Thanks for using Aplos, and we will talk to you soon.